Hello all, welcome to ETF Edge, your go-to place for everything exchange-traded fund. I'm your host, Bob Pisani, and of course, we're going to have a very interesting subject today, talking about the pending Coinbase direct listing IPO. It's actually just a direct listing. It's going to be this Wednesday, and it is eliciting an unusually vociferous, strong reaction, not just in the crypto community, that would be expected, but in the general community and in the ETF community. We're going to explain why here. I want to talk with Matt Hogan. He's the Chief Investment Officer of Bitwise Asset Management. He pioneered the first cryptocurrency index fund. Christian Magoon runs the AMPLIFY Transformational Data Sharing ETF. That's BLOK. They actively manage a fund focused on blockchain technology. And my old pal Tim Seymour from Seymour Asset Management joins us as well with his wisdom. Matt, you have told me several times Coinbase is the asset the crypto community has been waiting for, but it seems like it might be one that other communities, the broader community, are waiting for. Why is this such a big deal? Can you explain it to us?
Sure. It's such a big deal because it's the first large cap pure play crypto equity in the U.S. markets or in any markets. I mean, we're talking about a company with a valuation between $50 and $100 billion. You and I have talked about this, Bob. That makes it bigger than NASDAQ. It makes it bigger than the parent company of the New York Stock Exchange. And the growth is so phenomenal that you can't ignore it. This is a company that 10x'd earnings on a year-over-year basis. You just don't see this kind of growth from large cap equities. And every investor, not just crypto investors, are going to have to reckon with that growth, think about where it's going, and decide if it belongs in a portfolio. And that just makes it a game changer for where crypto exists in the total capital market spectrum.
Yeah, you know, Christian, what about you? You've got probably the one, I consider it the one crypto ETF that actually tries to be really crypto. You actually own assets that appear to be, crypto related. You own Novagrants' Galaxy Holdings Fund. But Block, are you going to be a buyer immediately of Coinbase? Explain how this is going to impact the ETF community.
Yeah, so Block is an active ETF, so we'll be able to own Coinbase on Wednesday, and I expect we will. About 27% of the portfolio right now of Block owns companies that are involved in blockchain and cryptocurrency infrastructure. So these are payment companies, custodians, exchanges. And to Matt Haugen's point, yeah, we own a variety of companies like Voyager Digital, Silvergate, Diginex, but these are small to mid-cap companies. Coinbase would be the first kind of large-cap company, so it's pretty exciting. We also think there's going to be other ETFs that will own this, own Coinbase. Cathie Wood and ARK are likely to own it in their fintech ETF as well as their innovation ETF. There's some IPO ETFs out there. There's some other blockchain ETFs and a variety of filings of new funds coming to market in the next month or two that'll be crypto sensitive. So it'll be a big deal in the ETF space.
You know, Tim, I just do not understand valuations here. I've never seen a 9 times valuation spread here. I've seen numbers at $23 billion to value Coinbase. I saw 50. I saw 100. I saw somebody at 2. How is it possible that we can't even get within 9 times of the valuation of the company? And as Matt pointed out, NASDAQ's $25 billion. If it goes at 50, it's twice NASDAQ. The ICE, which owns NYSE, is $65 billion. I mean, come on. This is like mind-blowing numbers here. Try to make sense of this for us.
They are. Well, I'm not sure I can, but I think if you look at the profitability, first of all, of Coinbase and where they've come in, even on the estimates on their first quarter numbers relative to where they were all of last year. I mean, you're talking about 2.5 times in the first quarter on profitability at a time when we've seen IPOs that have been far from profitable tech companies. So obviously, this is a frontier that the multiples on what people are willing to pay don't make sense. What is the imputed multiple on Square or other companies that have talked about being able to do Bitcoin transactions and crypto transactions? We can name all the companies that have had significant market cap increases here. So look, it's exciting. It's exciting to have that pure play. I think that really is the point. And where it settles in is going to be, also another issue. I mean, think about the move we've had in the underlying currencies, especially, outside of Bitcoin and even in the broader digital token landscape, all of the focus on NFTs, and you get the perfect storm here for this valuation, which is all over the map.
Yeah,
Bob, if I can just, go ahead.
Sorry, go ahead. Go ahead. Well, I was just going to say, and either one.
I think there's a good analogy here to an IPO that some of us may remember from 2012, which is the Facebook IPO. That came to market at a $100 billion valuation. People said the valuation was absurd. People didn't trust it because it was kids dressed in hoodies serving a new audience that they weren't familiar with. That's the same thing here. This is a giant company that's churning out real revenue and real profits, right? $800 million in profits in the first quarter alone is the estimate. So I think those valuations may not be as absurd as people think. It's just people aren't comfortable with this corner of the economy in the same way they weren't comfortable with Facebook back in 2012.
And Bob, one thing to keep an eye on too is ICE. ICE has kind of some phantom. The NYSE has some phantom participation in this area. VPC Impact Acquisition Holdings, ticker VIH. That's a SPAC that's going to merge with BACT Holdings, BAKT Holdings, and that is essentially ICE's digital asset marketplace. So that's going to happen this quarter. So the NYSE, via their ICE ownership and founding of BACT, will be in this game as well. So look for some of these other companies that maybe haven't gotten the attention to maybe get some follow-on benefits from the Coinbase listing.
Well, that's going to be good news, isn't it, Matt? I mean, first off, there's really an exchange. They make their money by acting like, exchange and charging a VIG for it. The VIG is pretty high as far as I can see. It's pretty amazing. I think the NYSE would love to have this kind of VIG. As they get competition, Matt, isn't it reasonable to assume the VIG is going to go down, or am I kidding myself?
No, it's definitely going to go down, Bob. No question it's going to go down. But the thing that's going to go up is the size of the audience that it's serving. Look, most traditional investors are still on the sidelines of crypto. They're still afraid of it. One of the first places they're going to turn as they start to reckon with this is Coinbase. It's the most trusted brand. It's the largest company. It's the most established. It's been running for nearly a decade. So yes, the profit margins are going to go down. The costs are going to go down significantly, particularly for Bitcoin. Maybe not for the other assets, but particularly for Bitcoin. But people are underselling how much broader the audience could be. And I think that's the flip side, the yin and the yang to this equation.
Right. So will this create new companies, new ETFs? I mean, the problem in the past with crypto has had the same problem with pot and the same problem with space. There's been a lack of investable assets, particularly a lack of reasonably large investable assets. Now you have a company with pick a valuation, $50 billion that comes in that's huge. It's magnitudes of order bigger than anything else. Christian, describe what that's going to do for the ecosystem. Will we see new ETFs built around it? Will we see a rush of new, smaller cryptocurrencies come in as a result of this? Obviously, it depends on how successful it is. We're assuming it's going to be successful. But what's the knock-on effect here?
Yeah, so I think for capital markets, we're going to see more private companies go public because they see the path, hopefully, that Coinbase takes that recognizes the value in the public marketplace. On the ETF side, I think there's at least 4 other ETFs that have been filed in the last month and a half that are going to focus on crypto and blockchain sensitive companies. That's what we do at Block, third best performing ETF of the year, over $1 billion and 5-star rated. So, we've been there, but there will be others that will take this approach, and there'll be different methodologies, weighting schemes, active index. So I think this will be a new asset class in the ETF space that'll be built out beyond the 2 or 3 funds that exist today.
Yeah, and I just want to point out, folks, I also go ahead.
Well, I was just going to simply say, because you also referenced this institutional dynamic and the investability of an asset class that both Matt and Christian have really emphasized. The wall of money that's going to come in behind this, or the institutional investability, is really the issue. And you mentioned other asset classes. I know we're going to talk about cannabis in a bit, but that's really the dynamic here. Think of the institutions, and I know there's been a lot of discussion about if corporate treasury put 2% of their assets into digital tokens and digital assets, what that would mean. But that is really, I think, the dynamic and why so much attention and so much I think intrinsic value is being applied to Coinbase.
Yeah. Christian, I just want to point out, to make sure the viewers understand how big this is. If we could put back up your main holdings. So, for example, I mean, and I laud you. You made an effort to really go out and buy true companies, not companies that are very peripherally related to it. But Voyager Digital, for example, you own 5% of your holdings. Galaxy Digital, that's Michael Novograd's company. MicroStrategy, that's a software company, but it's essentially becoming a Bitcoin company. My point is, there's Voyager too, Marathon Digital, Hive Blockchain. There's not a lot to buy. I mean, Novogratz' company, Galaxy Digital, Christian, is what, $3 billion? It's tiny compared to Coinbase, that may be, again, picking a number here, $50 billion. So I laud you for your efforts to own stuff. There's just not a lot to own. That's why this thing is so extraordinary, right?
Yeah, we think so. I mean, we thought there could be a pure play when we started this about 3.5 years ago. It's gotten purer and purer. And now really the opportunity, I think, could be with the Coinbase direct listing, and then really the analysis of Coinbase valuation. There could be a revaluation for this whole segment higher when you see some of the numbers that come from Coinbase. You know, if Coinbase is valued between 50 and 100 million, what are some of these other, exchanges, whether that's a Diginex or a Voyager Digital worth? Should they be revalued? Yeah. And I think that's the opportunity beyond just a larger group of investors adopting cryptocurrency and blockchain technology in general.
Matt, I got to ask you the eternal question. Does this improve at all the chances for a Bitcoin ETF this year? And what, if anything, will? You and I have talked in the past. There's a little bit of a political change in Washington. We have Gary Gensler now. I'm going to ask you, does Gensler being there improve the chances of a Bitcoin ETF, number one? And number two, the SEC laid out a very clear set of problems they had in rejecting prior Bitcoins, including the Winklevoss applications twice. They rejected it, and they basically came out and made it very clear: we are concerned with fraud, we are concerned with custody issues, we are concerned about the fact that a lot of it trades overseas where we can't control any of it. Has there been any move towards curing those defects? Aside from the political change, are we any closer in addressing the SEC's issues?
Yeah, we're absolutely closer, Bob. Whether we're all the way there or not, I don't know, but we're absolutely closer. Look, when the Winklevoss first filed for a Bitcoin ETF back in 2013, there were no institutional regulated custodians. Arbitrage spreads were all over the place. The CME Bitcoin futures market didn't exist. There weren't crypto funds that had gone through audit. The crypto industry, and we've been talking about this on the show, has gone through this massive institutional maturation. Every aspect of it has improved significantly over the past 5 years, over the past 3 years, and over the past year. Coinbase going public is just another part of that narrative. So absolutely, we're getting closer to a Bitcoin ETF. I continue to think it's a matter of when and not if, but we're not all the way there yet. The SEC has been asking good questions, and companies like Bitwise and others have been working to address those. But I do think we're getting closer, Bob. I really do.
So just to highlight this, I believe the SEC acknowledged the Van Eck application a couple of weeks ago. They've acknowledged, I think, WisdomTree as well, just the other day. So I think they have 45 days to accept, reject, or kick the ball down the road. My understanding is that they've always had up to 240 days once they acknowledge it. Is that correct, Matt? So potentially they could kick the can down the road for a while now. But your point is, regardless, you think it's much more likely this year. What about Gensler? You didn't answer that question. Is everybody seems to think Gensler is more sympathetic? Are you in that camp too? And that.
Well, what we know about Gensler is we know he's an expert on the space, right? He's taught a class at MIT on Bitcoin and blockchain. And all Bitcoin and crypto companies like Bitwise are looking for is a fair evaluation on the exact facts and circumstances of the market that exists today. So it's great that he's an expert, but really the questions that the SEC has asked over the last handful of years have been fair questions, and it's been the responsibility of companies to answer those. Like I said, fortunately, the market has matured rapidly that I think we have much better answers today than we did in the past. Does Gensler coming in help? I think it helps in that it's a new administration, a new fresh set of priorities, and that he's an expert on the space. But I don't think there's any magic sauce. The market has to be good enough, has to be institutional enough, has to be mature enough to support an ETF before the SEC green lights one. But the good news is I do think we're closer to that point today than we were in the past, and I really think we're getting there.
Yeah. I want to move on and talk a little bit about pot ETFs because we got Tim here. Tim, pass me the ETFs, dude. I was quite impressed. I look at the rankings of ETFs and how they're doing for the year. You know, I looked at the end of the first quarter. I do the usual thing. I go and open my file and look at the best performing ETFs, and they're all pot ETFs. Those of you who don't know, by the way, Tim Seymour is all in on this space. He's long a number of names. He's the portfolio manager of a cannabis ETF. He also sits on advisory boards for cannabis companies. And for all Tim disclosures, go to fast.cnbc.com. I had to say that, Tim. They're telling me to say that about.
There's a lot to say there.
Thing. But
there's a lot to say.
Tim's
Bob.
a real
Thank
expert. You. I know. Tim's an expert on this space, so we wanted to get him in. And honestly, I was quite surprised that not just your CNBS, but a number of your competitors were among the best performing, 50, 60% on the year so far. Can you sort of bring us up to date? Assume we're not experts on the pot business, and you see that spike in February, by the way. I want you to explain that, of what happened with all the cannabis.
Sure.
So bring us up to date on where we are on this.
Yeah, so again, you just hit it. We'll call it cannabis. I don't mean to be pedantic here, but no, the point is that the cannabis industry, as we talked about crypto and we talked about the digital token world and the evolution of an asset class, very similar dynamics in very different asset classes. But you're talking about dynamics that have a lot to do with a macro legislative pathway for an asset class that allows it to be investable by traditional institutional investors and maybe in some cases owned by retail in advance of that. So that's been the dynamic for cannabis investing for the last 5 years. And as you pointed out, I've been investing in the space for a long time, and I'm an emerging markets guy in my past investment history. So this is similar stuff. You asked about what happened in February that really led to this spike that's put a lot of the assets higher this year. And I think it's really two things. And a lot of this actually started in early January, and some of it, maybe the seeds were sown in the November elections in Washington. But ultimately, the legislative path on Jan 6th, when we woke up in the Georgia runoff, essentially designated a blue majority in the Senate, and that was a signal for significant asset flows into the space, just because the sense was that the legislative pathway for cannabis legalization would happen quickly. What does it really mean? Ultimately, again, institutions being able to invest in the sector, exchanges being able to list companies, and so while the north of the border trade, 5 years ago or 4 years ago or 3 years ago was seemingly more interesting, investing in U.S. companies and investing in the U.S. marketplace it's the biggest marketplace in the world. So that was really the movement in the asset class, and then you've had earnings profiles from companies all around the space that really in the first quarter you started to see those announced, and they were based upon fourth quarter numbers and 2020 numbers for cannabis coming out of COVID. Again, the profitability for the sector is the other dynamic here. So our ETF it's active, and again, I think that's critical in a sector that's constantly moving. And I think that the performance is a function of being active and being able to open and own all sides of the industry.
You've got a home run here, Christian. Not only are we talking about the AMPLIFY Transformational Data Sharing ETF, BLOK, but we're talking about the AMPLIFY Seymour Cannabis ETF. You're doing pretty darn well for yourself. And your iBuy, your retail ETF as a thematic tech ETF has done spectacular this year. You got anything else up your sleeve for 2021?
Yeah, well, it's been people like Tim and frankly the Taroso team and Block performing well. We've been really pleased to partner with them. Tim's been able to produce some unbelievable alpha versus the competition this year and even last year. And we, I will say we just filed on Friday for the AMPLIFY Cleaner Living ETF, ticker DTOX, DTOX. So that'll be a product we'll launch later this year. But we're really pleased to see CANNABIS, CNBS by Tim, be the number 2 best performing ETF coming into the market today, and Block is the number 3 best performing ETF year to date. So really blessed to have those and exciting opportunities. We think there's some great possibilities for both funds going forward.
Well, hold on here. A clean living what exactly is going to be in the clean? I love the detox. I love that.
Yeah. So
what exactly is going to be in this?
Be an index-based ETF that focuses on companies in the building and infrastructure, health, beauty, food, dining, energy, and transportation area that are producing products that are better for the either environment or better for the human body. So companies that are focused there, they have to have about 80% of their revenue in those spaces. So it's really kind of capitalizing on this trend that people want to live more cleanly in terms of their footprint, in terms of their health, in terms of the environment. So we think that's a trend that's going to be here to stay for quite a while. We think companies that are pivoting to that and have the majority of their revenue from that have a chance to produce some alpha.
Can't you just go the other way? I want to just see the AMPLIFY Go to Hell ETF. The symbol die now. How about let's just go the other way? Come on. Tim knows what I'm talking about. He's thinking exactly the same thing that I'm thinking, for crying out loud, aren't you, Tim?
Well, look, I mean, the clean living, detox, lifestyle. I'm not getting involved in this. I'm a supporter. I'm buying in. I need it all.
Okay. You're not taking the bait. All right. I tried to drag you in, Tim, there. You're handling, you're getting to be very professional about this. It's very annoying. That's it, folks, for this week's ETF Edge. You can see everything. My thanks to my friends here who joined. They understand me. There are many ways to see our videos, but the simplest way, just go right on the website, etfedge.cnbc.com. Now, I've asked Matt to stick around for a few minutes because I want to pick his brain more on the implications for blockchain in this big, big week for our podcasts. So don't forget, that's still there as well. Everybody, thank you for joining us. Have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the ETF Edge newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.